You are welcome to Remit Trade Academy. My name is Paradise and I will bring you this cryptocurrency video. In today's video, I'm going to show you how to trade futures on the OKX exchange. The OKX exchange is one of the best platform or crypto exchange that you can trade your derivative. So I'm going to show you that using my mobile phone, and I'm going to show you a step-by-step guide on how to do that. So let's dive right in. If you are new to this channel, please help subscribe to the channel, hit that like button, and don't forget to turn on the bell notification for more updates like this every single day. Also check the channel for other educational content. So futures contracts are derivative of an underlying asset. That means it is derived from the spot market. If you look at this very area, you see perpetual right here. If you follow my marker at this point, if you click on this perpetual, you see spot. The spot market is the real market, while the derivative market, which is the futures market or the perpetual market, is an underlying asset of the spot market. So you have to get that right. Then if you look at this very area, if I click on this very BTC USD perpetual, if I click on it right here, it will take me to this very option, and under all I click on BTC. If I click on BTC here, then if you look at this margin trading, under margin trading we have perpetual, futures, margin, options. Under perpetual we have BTC USDT PEP and BTC USD PEP. Now there's a difference between these two pairs right here. One have USDT and the other one have USD. If I click on the one that have USDT here, and if you look at it at this very area where you have available balance in USDT, that means for you to place a trade on this contract BTC USDT perpetual, you have to have USDT in this account. Then you can then buy or sell or place a long or short position on this very contract, and I'm going to show you how to do that in a step-by-step guide. So follow the video till the end. And if I go back again to this very area and I click on BTC, after BTC here, and then if you click on this very one, BTC USD PEP, if you look at the available balance here, we have 0 BTC. That means for you to trade on this contract, BTC USD perpetual, which is at the top right at this point, if you follow my marker right here, you will discover that you must have BTC in your balance at this very point for you to trade this very contract. So the difference between BTC USD and BTC USDT perpetual is that for BTC USD you're using BTC to trade, while for BTC USDT you're using USDT to trade. That means you must have USDT in your account. And if I go back again to BTC and I click on features, there's a difference between features here on the OKX platform, unlike we have on Binance, and perpetual. Now if you look at features here, we have BTC USDT 0812 weekly. What this means is that this contract actually expire. Now let me explain what it means for you to say a contract is perpetual. A contract is said to be perpetual if it does not have an expiry date, and if it have an expiry date, that means it is said to be an expiring contract. So the first one here, BTC USDT 0812 weekly, mean that this contract is going to expire on the 12th of August 2022. That is this week Friday. If you look at the second one here, we have this BTC USDT 0819 bi-weekly. This means that this contract is going to expire next week Friday. Okay, so you have to follow this very method to ensure that you know the difference between what we mean when we say we are trading on futures and perpetual on the OKX platform. If you look at this third one here, BTC USDT 0930 quarterly, that means this contract is going to expire on the 30th of September 2022. Now, having understand all this, I'm going to base this video on BTC USDT perpetual right here. So I click on this, and if you look at the top right here, we have the chart, and this chart right here mean that you have to do your technical analysis. After you have done your technical analysis and know the direction of the market, that is when you can then place your trade. And also, if you look at the top right at this very point, we have the OKX calculator. The OKX calculator at the top right here, you can use it to do your calculation and know your P&L, that's your profit and loss, your close price, and your liquidation price as well. If you go down right here and you look at this very area, we have isolated. That means this is where you can choose your margin mode, unlike Binance. If you click on this, we have cross margin and isolated margin. If you click here, a cross margin means that your entire futures account is open to that very position. That means in case of liquidation, let's say for example you have 100 USDT in your account and you are using a cross margin, and out of that position you use $50 to enter the trade, that is 50 USDT to enter the trade. It also means that the remaining 50 USDT remaining in your account is also exposed to risks. That means if the trade go against you to certain point, you will be liquidated and the entire 100 USDT will be lost. Remember, what you use in placing the trade is 50. That is what it means by using a cross margin mode. Now, for isolated margin mode, let's say for example, and you have 100 USDT in your account, and out of this 100 USDT, you want to use 20 USDT to place a trade. Let's say for example, on BTC USDT perpetual. That 20 USDT, in case of liquidation, that means if the market go against you, you are only going to lose that 20 USDT. The remaining 80 will still be in your futures account untouched. That's the main difference between cross and isolated margin mode. It's always advisable you use your isolated margin mode so that you define your risks and what you are willing to lose beforehand. So I click confirm here, and if you go down by the side of this, if you look at where my marker is right here, is the leverage. Leverage, what it does is it increase your purchasing power. Let's say for example, if you have 20 USDT in your account, normally on spot you can only use that 20 USDT to buy BTC, but on the futures market you can use leverage to increase your purchasing power. Then if you use 5x or 3x or 10x, that means what you have, if you're using 20 USDT to enter that trade, you are using 20 times 10. So it's increasing your purchasing power times 10 of what you have. So leverage, you have to understand that it helps give you a more purchasing power when you are trading an asset. But you must also understand that it is a two-edged sword. It can work against you and as well for you. And it is always advisable you use a small or little leverage. And I always advise use leverage between 1 and 10. So in this example, I'll be using 5x. So I choose 5x here and I confirm and I said go ahead anyway. And right here, you look at, we have close and open. We have open here and we have close. Now, when you want to open a position, it has to be on the open tab. And when you want to close a position, it has to be on the close tab. Under that, right here, we have this order type. If you click on this order type, we have advanced limit order, market order, stop order, trailing stop. All these type of orders are the same on various exchanges. But for the course of this video, I'm going to use a market order. Now, I want to explain something. So let me put it on limit order. Under this, if you look by the side of this very price, right here, you see BOB. This BOB means best of bid and best of offer. That means if you don't want to use your market order and you just click on BOB here, it automatically give you the best bid available or the best offer available in the market at that time. Or you can simply go here and use your market order. If you discover, when I click on this market order right here, the BOB disappeared. And if I click and put limit order, you see the BOB right here appear again. That also means that BOB and market order almost act as the same thing. And if you go right down, this is the amount of BTC you have to put here for what you want to place in case of placing a trade in your position, or you use this very percentage tab to just put in the percentage amount you want to use for your position. If you look at this very area, we have available balance. Right now I don't have any USDT in my account, so I have to do a transfer from my funding wallet to my trading wallet. All I need to do is to click on this very icon. So if I click on this, it will take me to this very page. For the purpose of this very video, I will transfer this from this my funding wallet to my trading account, and I will click confirm. Once I click confirm, then it will then reflect right here. If you look at it at this very point, I now have this amount of USDT in my account, which is 48.17 USDT. I can then use this to trade on the futures market on OKX platform. If you look at down right here, we have long position and this short tap. What does it mean to place a long position on futures? It's very simple, just like on Binance. When you place a long position, you are saying that you've analyzed your chart, and from your analysis you believe that this chart is going to move to the upside. That means price is going to move upward. In essence, you are saying that Bitcoin is going to increase relating to USDT. The same thing, when you place a short position, you are saying that the market is going to go down. That means price is going to move downward. That means USDT is going to gain strength compared to BTC. So when you place a short position on futures, you have to understand that it's different from what you do on your spot trading. On the futures market, when you place a short position, you are saying market is going to come down, and if market come down, you will make profit. If market go up against you, you will lose. The same thing to long position. When you place a long position, you are saying market is going to move upward. That means the price of BTC USD perpetual is going to move to the upside, and if market move to the upside, you are going to be in profit. If it comes down against your prediction or against your analysis, then you are going to lose on that very trade. Now, the difference between, or one of the difference between the spot market and the futures market is that for the spot market, when you sell, you are actually converting maybe BTC into USDT so that it will be stable. Now, in the case of futures, when you place a short position, you are actually profiting from the market drop. Let's say, for example, in a bear market, it will be difficult for you to trade on the spot market, but it will be easy to navigate and trade on the futures market. So that is one of the difference. And if you want to know more difference about it, there is a video on this channel that actually explains the difference between sports and futures trading. If you look down right here, we have open order right here and positions. Now, these are two different things. Open order are for limit orders. That means if I place a limit order, it will reflect under open orders. Why? If I place a trade using market order, it will execute instantly and you will have it under positions right here. Now, let me do an example. Let's say, for example, I believe that this market is going to move to the upside. That means from here to the upside, and BTC is going to increase in relation to USDT using BTC USDT perpetual futures contract. All I need to do is, first of all, I have to do my analysis and ensure that the right direction of the market is what I am predicting the market to go. And I have to choose my margin mode, which I said choose isolated, and choose my leverage, which I want to leave it at 5 right here. And after I do that, I have to put it on open because I want to open a position, and I can go here to choose my market order. After I choose my market order, I can decide to say, okay, I want to use 50% of what I have in my entire balance to place this trade, and then I can then click long BTC. Once I click long, it will bring out this box where you can put your stop loss and your take profit at this very area. So if you want to put a stop loss, the stop loss actually help stop you out at a point. So if I put my take profit here, which is the point I'm going to collect my profit for a long position. So if the market price right now is at 23,200 approximately, and I want my take profit to be, according to my analysis, at 25,000 USDT, and my stop loss will be below my entry price, which I want to choose 22,000 USDT right here. And then I can then click confirm. Once I click confirm here, I will open the position, and if you go right down at this very point, you see open position right here. See, the position is already open and we are in profit. Now, if you look at this position right here, how do you know that your position is in profit? Your position is in profit when you have this area green at this very point. And if it is red at this very area, then it means you are in loss. If you look at it, you see PNL bracket open and close USDT right at the bottom at this very area. Now, I don't want to spend much time on this video by explaining what all of this mean, but how can you close a position? For example, in this case, a long position. It's very simple to do that. All you need to do is to look at this very area. You see close. Once you click on close, it will automatically collect the profit you've made for you. And if you look at this very area, the profit right here is 14 cents. That is 0.12 USDT, which is 0.19% at the moment. So I can close this and my profit will be added to my balance. Okay, so this is how you place a long position. So if I want to close this position right now, I will just come right here. Either I use this close tab or I use this close all. So if I use close all right here and I click on OK, then my position will be closed. Remember, if you're using close all tab, that means all the position you have on position tab right here will be closed, but you have to use the close tab. Okay, now if you want to place a short position, you have to click on open here. That means if you want to open a short position, what that means is you are saying the market is going to go down. That means market is going to go down and you're going to profit from market coming back down in terms of your analysis. So all you need to do is to put it on the open tab. Remember, you might have choose isolated margin mode at this very area, and your leverage should be between 1x to 10x, and I use market order and I want to use 50% again of my entire balance I have right here, and I have to go back down right there and click on this short position. Once I click short position, like I said earlier, what it means is I am saying market is going to drop, and if market drop, I will be in profit. If market goes up against me, I will be in loss. So I'll click on short right at this very area. So if I click on short, after inputting this value, if I want to use 75% of what I have in my balance right here, and then I click on short position, then it will now bring out this confirmation box. And if you want to put your TP, you can put your TP as well, but that will be for another video. And I'll just click confirm. Once I click confirm, my order have been placed. If you click on this position, you see the order right here, and it is also in profit because this value here is green. If it's red, then that means we are in loss. So this is how you place a trade on the OKX features platform using your mobile phone. If you have any question, you can always check the description of this video. See a contact, reach out to me immediately and ask your question. Don't forget to leave a like and share this video, and also subscribe to this channel. Thank you very much for watching today's video, and I will see you in the next video.